This is Eric Mwathe with Mwathe.com. It's January 30th, the last trading day of the month. We are about 2 hours into the trading day, and we are currently trading about 114 points lower on the Dow, actually just making new lows for the day. Not a big surprise. I hate to say it, it really isn't. But just a few minutes ago, the Dow was actually just down as much as only about 60 or 70 points, and the reason being that we were seeing that FRE-PZ, I'm not saying you traded, was actually hitting a double top here, and so there was a pullback. But what might happen is with this double top, if we break out of that, then instruments like the SKF might start moving again. But as of now, they have to contend with this short-term hourly double top. A move above that double top is a strong sign that what I've been talking about on Twitter is that this market might close lower. Let's go and look at the charts. Now this is a chart daily, 1 year daily for the QQQs, and the reason why I bring this up is yesterday after the close I pointed out that the fact that we closed with the RSI at 50.53 made it seem very likely that we might see a huge down day today, and it seems to be playing out on Q. It's a very simple observation, but this was where the RSI closed yesterday for the QQQs. That's yesterday on Thursday, the 29th, and if you take a look in the initial trading hours, actually in the first hour or so, you saw that the Qs moved the RSI just below, just above 50, and then when I saw them finally crack and I saw the RSI move below 50, now I started considering the fact that this market might be down a lot. And that's why on my Twitter blog, and this is a free blog, all of you can follow me on Twitter, I did point out, in the first couple of first half hour of trading, that with the Dow now up 17 points, the Dow was up 17 points, I will not be surprised if the day ends up being another nightmare for those who are long. Also, I said I think we are setting up for a 1 to 3% drop in the Dow. Now remember, the Dow was up 17 points. So it's a free blog, but sometimes you can set yourself up just by knowing what's going on. Okay. Also, I've been talking about gold. I have nothing against gold, really. It's just I'm trying to be objective on the instrument. I have no vested interest at all, zero. But I didn't point out that gold, again, needs to move above this line here, which is the price channel top lines. We just kissed that high as of this early morning trading. I don't know where we close or what happens in the coming days or weeks, but like I keep saying, for gold to move higher, we need to see it move above that line. It's very simple. That's it. I mean, also notice that the RSI on gold has yet to break out. Just follow the RSI. It's a simple observation. The RSI has yet to move above the RSI top lines, and until it does, the objective view here is not to rush in and buy gold. I would not be surprised that if we cannot break above this high here, that we see 550 on gold before we see 1,000. And I know that's if we can break out, we're going to see 550 before we see 1,000. It's really that simple. So gold has a couple of days or weeks to contend with these price channel top lines. If it cannot move above that, then it's going to drop. On Twitter, yesterday I talked about Palm being a potential short, and the reason why I say that is while it was trading around $8, it seems to be stalling around this 820, 830 level, and once we saw that developing, this repeated test of this high here is especially when Palm breaks that hourly price channel support. I think it has might give back, because it's really moved from around $1.50 all the way to 8, so it's due for a pullback, and I think the pullback might bring it all the way to fill this gap around the 450 area. So that's my price target for Palm, especially after it breaks this price channel on the hourly. Also, the other way we can play this market, given the developing situation here, is